Hello, Stephen Koukoulas here, economist in residence with Zagga, and wow, what a month we've seen for the economy and where to start. I think if we focus on the economic growth numbers, GDP growth, just 1% in the year to the June quarter, one of the weakest levels of growth that we've seen since the early 1990s, outside the COVID pandemic period. And it just goes to show that interest rate hikes are working. Where that weakness is more from us consumers, you and me, on our spending or lack of spending. We're adjusting to cost of living pressures, to interest rate hikes by really scaling back our expenditure. And so when we look at things like household consumption, retail sales, they're the weakest part of a relatively weak economy elsewhere, and that's where the concerns are going. Now, with an economic slowdown, you often get a softening in labour market conditions. Now, we have had the unemployment rate go from 3.5% about a year ago to 4.2% in the latest reading. That's a usual sort of increase when you get the economy slowing down. The concern would be that given that job vacancies are continuing to sort of trend significantly lower, that we're going to have yet higher unemployment over the course of the remainder of 2024 and into 2025. How high it gets is the $64 million question, I suppose, but I think we're going to be more inclined to see that figure approach 5%. But it's also coinciding with another important part of the business cycle, and that is wages are very much coming off the boil. Not that they were terribly hot a year or so ago, but we did have wages growth looking at 4.2% in annual terms. We know that from the quarterly momentum, we're probably going to be getting wages growth at about 3.5% in annualised terms in the quarters ahead. The other bit of news, the RBA's left interest rates on hold again. The last interest rate adjustment was in November last year, so we're getting close to a year where interest rates have been steady, and the RBA is not really signalling much of a bias. Look, they still want inflation to come down. Who doesn't? And they're still concerned about the economic growth position. Who isn't? So they've got this sort of schizophrenic view on the economy, and that's not a rude comment, by the way. It's just that there's so many moving parts. The thing that's giving me confidence that the next move in rates will be down, and in the not too distant future, is that we've seen a range of interest rate cuts around the world, from China, from the US, from the Eurozone, the UK, Canada, New Zealand, Switzerland, Sweden, just to name a few. And those central banks aren't cutting interest rates for fun. They're doing it because their economies are weak. They're doing it because they're confident that inflation's tracking towards their inflation targets. And I think Australia and our Reserve Bank of Australia will be part of that as well. So it's a picture of weakness occurring in the economy. A couple of issues on housing. We've got a very mild upturn in the number of new house building approvals, admittedly from a low base. And yes, we want to see not just 1 or 2 more months, but we'd love to see another 6 months or more of a trend increase in building approvals before we're confident that housing construction is going to be having a better 2025. The green shoots are there, and if we get a rate cut, that will certainly help. And the other thing is a very strange phenomenon in the Australian house price market. We've got price booms still occurring in Perth, Brisbane and Adelaide in particular. The rate of increase is actually easing a bit. Sydney, the boom is tapering off. Prices are broadly flat over the last couple of months, having had a very strong year prior to that. And prices are actually flat to slightly down in Melbourne. That's an important market for the housing sector, but also Hobart, Canberra, Darwin, there's also some weakness there. And there's just a little bit of evidence that the rental vacancy rate's ticking higher as well, which sort of suggests that pressure on housing will start to ease at least a little bit over the remainder of 2024 and into 2025. So for the folk at Zagga, really looking forward to seeing how the economy performs. I think it's going to be weaker before we get some strength very late this year or early in 2025. So hunker down. The real catalyst for a pickup will be when the Reserve Bank finally bites the bullet and puts interest rates down. Timing, very hard to say, but with a lot of other central banks around the world cutting interest rates, we might get that rate cut before the end of the year and a few more in 2025. Thanks very much. Looking forward to chatting in future. Cheers.